being able to sell or being able to influence is extremely important to the real estate investor. I think a lot of real estate investors don't realize this either. A lot of them are technical folks and they get into this business and they have no idea how to build relationships and to influence people along a course of events or throughout a process. And the result is you're not as effective. You don't get deals done. You don't have advantages, right, that some of these other investors do because they know how to sell. And we'll talk about what selling means today, but because it's not necessarily the definition that a lot of people tend to assume it means. There's like a stigma around selling, right? It comes across as like nefarious, like you're using like neuro-linguistic programming or mind control to be able to like force a result out of someone that they don't want to engage in, right? You're kind of tricking them. And that's not what it is at all. It's really just being able to draw two things that make sense either together or along a path that wouldn't have otherwise happened without your efforts. So let's look at this in a more positive sense. But the second you open your mouth in any investment setting, in any setting, the second you open your mouth and you're trying to obtain a result, you're selling. In fact, before you even open your mouth, you're selling. And what do I mean? Like, well, first of all, I'm selling you guys right now. We'll go back to that later. But the second you write a letter to somebody, the second you text them, you send an email, to start to get a deal done, let's say, as an example, you are trying to influence a certain result or a certain outcome, or you have an outcome in mind, and your communication method is trying to carry this other person through this process with you, right? So you're selling it every step along the way. I mean, if you think about it, right, you break down the real estate investment, either acquisition or sale. Look at two sides of our business. So we run a kind of a high-end, like a white glove turnkey wholesale hybrid, right? And we have two businesses. We're acquiring customers to buy our properties, and then we're acquiring properties at some discount from what our customers are willing to pay for these properties, right? And with both of these kind of different branches of the business, we're doing all these things. We're marketing, right? So you market, which written communication, you're influencing. You engage, right, that first point of contact, you qualify, you learn more about the situation and the person on the other side of the transaction or the business. You propose something, you close eventually, and you go through the process of closing, which in real estate is a long process. It's not just sign one contract and a credit card swipe. And then you, in many situations, maintain a relationship, right, that you've established, and that the maintenance of that relationship brings both parties value over time. You have to influence it every step along the way. And, like I said, the second I opened my mouth on this live, the second you hopped on, I was selling you. A lot of you folks will buy my course, join my investor list, purchase a digital product from me. And in exchange, I'm bringing you value, right? That's how I'm selling you. I'm here saying, hey, let me teach you something cool that I've learned from thousands of hours of experience and risk that I've absorbed that you don't have to learn these things. In exchange, I want a relationship, and that relationship does have some monetary benefit for me, but you guys are cool with it, right? The folks who are out there buying our investment properties are happy to be buying them from us, but they wouldn't be if I wasn't here on this live talking to you. In fact, I've seen several of my investors already sign in within the first 4 minutes of this thing, right? So you're always selling. You have to kind of take that mindset and understand that you can be better at it, and it's not a game that you have to play. It's a series of circumstances that you have to kind of create for yourself to be more effective, right? So before we go any further, we're going to talk about coupon code, and then I'll jump into the meat and potatoes of this whole thing. So the coupon code today is going to be closer, all lowercase. It's probably something that you're not. Maybe after this live you will be, or you'll be a better closer than you were before. So CLOSER, all lowercase. That's the coupon code. It's good for any digital product in the toolkit store, right? The course is not included. That thing's too expensive to give away, too good to give away, to be honest. And I don't want to diminish its value by giving it away. It's already a steal as it is. So, disclaimer, the coupon code closer, it'll be active at some point after this live, very shortly after this live. Now, I'm going to announce when it's active in an Instagram story. And when I announce that, I'll have a link as well. You'll be able to go to the bio and pick from the products, go to the store. And when you get to the checkout section, there's going to be a coupon code slot if the coupon code is still active, but I'm giving away a limited amount. I'm giving away 40, right? So if all 40 have been redeemed, that coupon code slot is disappearing. It happens really fast. Don't DM me going, oh man, it's only been 7 minutes and the coupon code slot's gone. Are you sure this is real? Yes, it's 100% real. The wolves don't wait 7 minutes. The wolves are in there within the first like 90 seconds maximum getting these freebies, right? So the coupon code slot is closer. If there's no coupon code slot, the coupon code is closer. If there's no slot when you hit that checkout or pay now button, whatever it is, it's very obvious, I'm giving you my money button, then you just gave me your 40 bucks. Thank you very much. But otherwise, enjoy yourself a freebie if you're able to grab one of the 40 that I give away today. Look, today we're going to take this format. First, I'm going to talk about an interesting deal that happened that kind of inspired this live discussion, right? And then I'm going to talk about a couple topics, a couple techniques that were used to be able to get this deal across the finish line, right? So there's 3 different techniques, sales techniques, to get this deal across the finish line. And I'm going to contextualize them a little bit more for you too, right? I'll give you some background discussion, then I'll relate them to the deal a little bit more. And then we'll talk about 2 more techniques that didn't pertain exactly to the set of conversations in this deal, but are general tactics to be able to set yourself up to be more successful in your ventures to influence, right? Your aspirations to influence, to be a better salesperson, be able to convert more. So 5 different things. There's going to be a story first, then we'll talk about the topic, give you a little discussion on it, relate it back to the story, move on to the next one, then we'll wrap this thing up. So get your notepad out. This is going to be a good one. If you're watching this now, you're probably watching it passively because it's live, it's Friday, it's 9 o'clock. This might be another good one to watch this weekend. This is more profound topics, right? Or the things that you don't hear on the surface level. So that's kind of my opener for this. We're not going to talk about bullshit like, you got to build rapport, you got to find a pain point. Fuck all that nonsense, dude. That stuff is not that important. Everyone can do it. When you try too hard to do it, you come across as salesy. That's a negative word, right? No one likes salesy. What you want to do is you want to come across as credible. You want to come across as delivering something valuable to a person, and you want to be in control. And you want to come across as in control, and you want the other party to relinquish control to you willingly, right? That's when you win. That's when they win as well. When they go, you know what? I want this person to just handle this for me, or make this series of decisions for me with me just monitoring them in the background. That's how you influence. So anyways, this background, or the story that inspired this live, was a fourplex that we recently picked up. So this is a fourplex somewhere in Indiana. I'm not going to tell you guys where. Market value in good condition is probably somewhere around $225,000. It's a tiny property. It's like all small 1 bedrooms, kind of like a little more than a studio each. But it was a nice building inside, and on this, on the surface outside, in a decent part of town too, right? So we were interested in this. We locked this thing up for $115, or maybe it was $110 with a seller, knowing that it needed a roof, right? So we go in, we inspect this thing, and cosmetically, it was pretty nice. But all the electrical was outdated, not the wiring, but the panels. The windows were all really old and in rough shape. I think there was some other mechanical work. I think the furnaces were all older than expected or something like that. And there was a questionable foundation. So we go back to the seller and go, look at all these issues. Plus we got a foundation problem here we have to investigate further. We're gonna need a price reduction. And before we investigated the foundation further, got the contractor out, the seller agreed to a price reduction that brought us down to, I think, $85,000, because there was a good amount of additional work to the property, right? It's already a pretty good deal, but you absorb that extra work, super under rented, and all the utilities were owner paid too, so we had to charge those back. So the price was already low at $115. We get down to $85,000 because of some inspection discrepancies. We get a foundation contractor in there, and there's $40,000 of work, and it's substantial work. $40,000 of foundation work on a small property in a small market in Indiana is not a small job, right? That would be a $100,000 job here in California very, very easily. So we had to reapproach the seller. We had to have a discussion with this seller to try to convince them to sell us the property for $40,000 less plus an additional margin of safety, right? And we got this seller to agree to sell us this fourplex for 40 grand. Not 45, so it was 85. We took it down to 45 and said, hey, we need a margin of safety. We got it to 40. Seller agreed, and there was no argument. And the seller completely understood that we had to get this property for 40 grand. And I'll tell you why with a couple of these topics. So it ended up in a home run deal for us, where we absorb risk that we understand how to take, that we're willing to take, that another party is not willing to absorb, right? So $40,000 fourplex, cosmetically nice inside. I'll post some interior pictures, like previews in the story afterwards, so you can see what kind of property we got for 40 grand. It's actually pretty nice. But how do we do it? So I'll hit you with each topic and then I'll contextualize each topic. The first one is, I wrote empathy. You can see it here, right? I wrote empathy, but then I crossed it out and I wrote understanding. Why? Because empathy is a little too kiki for my liking. It's not what I'm trying to get across. I'm not saying you got to feel for the person. You put your arm around them, hug on them, and go, I'm so sorry your foundation's messed up. You have to, I mean, like, respect the fact that there may be a difficult situation on the other end. But really what I mean by understanding rather than empathy is you have to really understand the business, the matter of business that you're discussing on both sides. And then you have to really understand the process that you would have to undertake. You have to understand your own business and your process very well. And you have to understand what the seller is going to have to go through, right? You're gonna have to understand the dynamics of the seller's relationship with their property, their situation. How do they manage it every day? What are the little things they encounter? How are they collecting from their tenants? Are their tenants paying a little bit late because they're all paying cash? That utilities bill, it's really high. Are the tenants just leaving the windows open? What kind of maintenance have they done? Why is the foundation so messed up? The seller was obviously aware of it. They kept the units clean, but they probably put a Band-Aid on the foundation because they were afraid to spend money on it, right? And then they deferred it too far and it got too expensive for them to be able to afford to spend money on. You got to understand how these situations got to where they were and then what they're going to be like in the future in your own business very well, right? So you have to be kind of like a technical master of the entire environment, right? That's the empathy side comes from knowing exactly how the other party operates, exactly how they operate, how they think, what they're going to have to do in the future, what's important to them, what is a deterrent to them, what they may be afraid of, every fine detail. And you can tap on these things when you do understand, right? Telling the seller, hey, look, I know you know about this foundation issue. I know you know about it because I see that you've made a makeshift repair to it. What happened is the bricks inside were starting to cave, right? The walls started to bow from the hydrostatic pressure on the outside, and the mortar between these bricks on these walls, it wasn't poured concrete and rebar foundation, it was bricks, right? Because of older property. So the mortar starts to deteriorate, it gets weaker, and the bricks start to bow inwards. And if they bow inwards too much, well, it collapses, right? A wall completely comes in. So they put a makeshift retaining system where they put up like basically like 2x4s, 4x4s all around the inside of the basement, 3 or 4 feet away from the actual brick walls on the inside of the basement. And then they set up plywood retaining walls along this framing system, and they poured like concrete and dirt and gravel and all that stuff in between there, like up to 3 feet high, basically, up to here, to be able to apply extra support to the walls. Very makeshift, very janky. Like it looked like a World War I trench in there, right? So understanding this, going to the seller and going, I know why you did this, because that's a very expensive repair and a risky repair because you could find more behind that wall, right? And it's hard to find a contractor for it. It takes months, and you figured you didn't need to, but it got worse, right? That's understanding that will allow you to, hit that, what's that pain point that people always talk about, right? To be able to understand why someone would have to work with you. Because you get why they did something, because you get their situation, because you get your value to them, right? You go, hey, I know what needs to be done here. It takes a lot of money. So having an understanding of the circumstances is going to make you not only credible, but trustworthy in this situation, because it's not closing. Don't lie to them. It's closer. That's the code. It's gonna make you a little more trustworthy in this situation too, right? Because you're not using you're using logic to rationalize the outcome that you're trying to create. And people could agree to logic. They can't agree to haggling, right? Number 2 is alternatives. So number 1 is understanding. Number 2 is alternatives. What do I mean by alternatives? Well, every decision is driven by alternatives. The seller's decision and your decisions are driven by what other options you have out there, right? And understanding the seller's alternatives or the other party's alternatives and your own puts you in a position of power. How do they do that? With this particular fourplex, what did I tell the seller? I said, hey man, I know I'm hitting you at a crazy price at $40,000, or it sounds crazy to you, or it's very low compared to what you thought you were gonna get. So I understand if you can't accept it, But I would strongly recommend that if you don't accept this price and we walk away from this deal, you go, I'll give you this contractor bid for 40 grand. It was a really good price. Most people would come in more expensive. We have a relationship with this guy. And you go spend that 40,000 on this property immediately after. Now, what I was doing there is I was setting up a lock, right? I told him, I said, if you don't spend this money on this property immediately after, the city is likely to come in and condemn this property if they ever discover what's going on, right? Which means you have to vacate the property. It'll be deemed uninhabitable, and the property is going to be sitting on a tax sale, most likely, right? And you can't sell this on the open market to anyone other than a client or a buyer like myself, a very savvy investor who's willing to take on a lot of risk, who's done a lot of deals here, who has an established team, because no one's going to want to deal with this situation. And you can't sell it to someone with a lender, because an appraiser is going to come in and say, I can't justify the value of this property. It's going to have to be a cash deal. So I presented all the seller's alternatives to them. You keep it, you fix it yourself, 40K. You sell it on the open market, appraiser doesn't work. It's got to go to an investor. Your property gets condemned if you don't fix it, and it goes vacant, right? And all these alternatives were far less desirable than my $40,000 that I was going to give this seller. I was showing the seller that my 40K offers the best situation for him, the best decision for him. This is called setting up locks. Before the seller makes a decision, right? Before the other party makes a decision, you present them with all the alternatives and why they're inviable for that particular person or their situation or for their decision. And the result is they have to go with you. They have to go with you. Before you've even pitched them anything, they have to go with you. That's it. So that's what setting up locks is. That's how you utilize alternatives. Now, alternatives on your end, right? Alternatives on your end are, do I have backups? Do I have other things I could do with my money? Do I have something to do besides pour my 85K into this deal? If this seller doesn't accept 40 and goes 60, can I say, no, I got better things to do with $60,000 than buy this property. I don't have better things to do with $40,000 than buy this property, but I do have better things to do with, I do have better things to do with 60 than buy this property. The comments were distracting me a little bit, right? So you want to have alternatives yourself. They put you in a position of control, and they put you in a position of number 3, detachment. This is the most important piece of sales psychology that exists, and business psychology and the psychology of influence that exists out there. I want to tell you right now, I'm here on this live hoping that, would love for you guys to go and become customers at some point. But I don't give a fuck if you're not. I don't need you to be. I've got plenty of cash. The sales are great. Investment firms rocking it. I do not give a shit if you do not go and buy something from me today, right? And with this seller, I didn't give a shit if he said no to my 40K offer and said, get out of here. I'm walking away from this deal. There's no chance that I'm going to do business with you. I'd go find something else to do. I'm completely detached. I would not come up a dollar. In fact, he didn't accept 40 right off the bat. He's like, what about 55? And I'm like, I can't do it. He goes, what about 50? I go, absolutely not. He goes, what about 45? I said, no chance. There's no chance. I can't do it. It makes no sense for me. At $40,000, I'm not in an advantageous position, right? I'm actually at my limit at $40,000, and I'm here going, do I really want to buy this for $40,000? So no, I don't have a cent over it. Emotional detachment is your key to showing someone. What it demonstrates to someone is you're not haggling. It turns off their haggle button. When you haggle back and forth, they think you're playing a game. They're encouraged to play it back with you. I'd like to show people in any situation of influence, I'm not playing a game. This is a good situation for you. This is my offering. I don't have any intention of backing off of it, and I have many alternatives. Take it or leave it. That's what we do with our buyers too, right? So we have a really big buyers list. Our buyers list is like 22,000 people that have opted in through the link in bio. Many of them, say the vast majority, have over $100,000 of cash to spend, right? So that's our requirement to even get on the buyers list. So they see it in the button and they click that button. Presumably most of them have 100,000 or more because they read that button. Some don't, right? But many do. We have a qualified list, a limit. 2,000 people is our cap that actually get to see properties from us. We get about 50 to 60 offers per property that we send out. And I'd say most of them are cash offers these days on anything under $250,000. If a new buyer comes to us or any buyer comes to us and they say, I'm interested in the property, but I want a lower price, we just ghost them. Right? We ignore them completely. Oftentimes we take them off the list completely without even telling them. We are so detached from getting your business, getting their business, and so focused on providing value to a large volume of people, we'll talk about volume later, that there is no sense of desperation ever. The second you're in a position of desperation, the person on the other side of the transaction, they will notice it and they will exploit it, because there's a balance in business, winners and losers. We seek to keep that balance right in the middle so that we win in our way and the person on the other side wins in their way, right? Or in our favor if we can, right? Or at least something that's very favorable to us. I will back away from any deal out of pride. This is pretty interesting. I worked for a big crop technology company before I did sales and before obviously this investment firm. I was on the science side of things. And they overproduced on soy by literally millions of tons one year. What do they do? So this is kind of sad, but this is how business works, right? But they literally incinerated it. They burned it. They didn't release it into the marketplace, because if they release it into the marketplace, the commodity value would decrease so much from the increase in supply that it would create a net loss versus the loss of actually burning the product itself. They lost less money burning the product itself than they did, They lost less money burning the product themselves than they would have from releasing it into the marketplace, right? And that's a mentality that I understood that from a business perspective, right? That taught me a lesson. So I came here and I went, I'll burn a deal, I'll lose a spread before I discount a property. And we haven't had to in years, but I will burn a deal before I even reveal that discounting is an option, or lead on that discounting is an option. The final note I have on detachment, because it's so important, that's why I'm talking about this so much, is one of the best sales guys I know, a good friend of mine, worked with him at my last job at that tech company that I was working at, that software company I was working at. He told me once, he's like, man, when I'm above quota, it's I'm unstoppable on every call. I'll get on the phone with these people and I'll tell them right off the bat, I'll go, hey, look, here's what it is. I'll show you the product. I don't give a shit if you buy it. I'm so far over quota already, so I don't really care. Just tell me if you want it or not. And they would just love it. They'd eat it up, right? They'd be all over it. But the second that you are behind on your quota and you feel like you want the close, you're attached to an outcome of the close, they could smell the desperation on you. They could tell that you're weak, right? So don't put yourself in a position where you could become psychologically weak and over desire an outcome, because you will lose deals as a result. You will lose in business as a result, and you'll lose control, period, right? And it's extremely important to have control in any business venture, because control is the seed to reproducibility. Reproducibility is the seed to scalability. Scalability is what gives you money. Write that part down. Control is the progenitor. You like that word? Right? The progenitor to reproducibility. Reproducibility creates scalability. Scalability creates wealth, right, in business. So let's talk about how you can get a little more control, a little more reproducibility, and more alternatives and reasons to be detached. Right, so how do you set that up? That's all great, Elliot. How do I get to your position where you can feel emotionally detached from an outcome, where you have a lot of alternatives? Here's how you get there. Let's talk about two more things. So let's switch the order on them. Let's switch 5 and 4. I had volume last, but let's talk about volume first. Volume, what does volume mean? Volume means a lot. A lot of what? A lot of potential opportunities. A lot of potential opportunities. Sales is about a pipeline, creating a pipeline, a strong one, and then managing it and moving it at a good pace, right? So how do you create it? How do you operate it? It's just like rental properties. How do you acquire it? How do you operate them? If you can figure out how to acquire them, how to operate them, you automatically won as an investor, right? Well, if you want to win at acquiring rental properties, you have to win at being able to create influential relationships, right, with deal sources. So How do you do that? You create a lot of leads, right? And you move a lot of those leads through the pipeline in high volume. That means you should be out there deciding how much effort you're willing to put in, and then create a system that is like corresponds to the type of effort you want to put in. What do I mean? Maybe you want to go off market and you want to put a lot of active effort in, right? That's what we do. We're active acquirers. We send out 25,000 mailers a month, and then a bunch of other types of marketing to supplement it. And then we bring in several hundred fresh leads a month, and we have a current pipeline of sellers that have inbounded to us of about like 10, 12,000. Right now, because we have so many, all we have to do is keep working it. All we have to do is keep working it. Right? So if you're new, you got to decide how you want to bring in those leads. Maybe that's too active for you. Maybe you just create a lot of relationships with wholesalers and with key brokers off market, and then you're constantly following up with them, and you're just having them send you leads. Maybe you have notifications on Zillow so you can see newly listed, because the only chance you have at getting a slightly decent deal on the MLS is if it just got listed. Those things get snatched up quick. Or if it's been sitting for a very, very long time and you have a chance to lowball, but I think people have already lowballed them, so that's not as good an opportunity. Maybe it's getting on Facebook groups. Maybe it's Facebook Marketplace. Maybe it's scouring Craigslist, right? But you need a lot of opportunities in front of you, and then you need to work them in volume, right? Our salespeople here, our acquisitions reps, make 80 phone calls a day to inbound sellers. Inbound sellers. What's an inbound seller? Someone that actually called us off a marketing piece that we've sent them for years straight, expressing interest in selling. And they still call and follow up with 80 call a day volume, which might mean 20 connects, right? 15, 20 connects, something like that. But those people that are not answering are also getting voicemails many times. They're getting text follow-ups. They remember us, right? And we do this with so much scale that people give us deals on a weekly basis, which creates alternatives. We get about 2 deals a week, maybe 3 deals a week here. They vary in size, right? But this week we sold 5 deals, right? And we got, I think, 3 contracts signed with sellers. So we do a lot of volume here, and that gives us a lot of alternatives and a lot of power. You want to make sure you have enough opportunity in front of you, and if you do, you won't be desperate. That's the message, right? If you don't have a lot of opportunities in front of you, you're gonna buy shitty properties or no properties. And you are going to be emotional and in a position of limited control when you are trying to influence the opposing party, right? Opposing party? The other party? It's not really opposing, right? The last skill is qualification, folks. What do I mean by qualification? I had an old mentor tell me that your number one skill as a salesperson is the management of your time. What do I mean by that? I see so many new investors spending way too much time on junk deals. You ever heard the term clogging your pipeline? If you worked in sales, you have. Clogging the pipeline is when good opportunities don't get to move through your pipeline because there's too many bad opportunities in the way, preventing you from processing the good opportunities. See what I mean? Right? Stop analyzing shitty deals. Sniff test them. Right? Stop trying to negotiate with sellers that are priced way too high and say they don't want to come down lower. Stop following up with them so much. Check on them every 3 or 6 months. Right? Stop going to the broker on the MLS that has a property that's obviously a good deal and hit them at a lower offer and then ask them a bunch of questions before you give them that lower offer. It's a complete waste of your time. They're not going to accept it. Know what's likely to convert. Profile a win. Profile what a winning situation is for you. And then early on, look for reasons, very early in conversations with them, look for reasons that deal might not be what you'd like it to be, and get it out of your pipeline if it is. What do we ask first in our qualification process when we're dealing with a seller? We go, hey, what are the rents? What are the utilities? And what's the least you take for this property? That way we know we can run a pro forma and go, what are the financials on this thing? We don't ask them about the roof and the cosmetics and any of that shit. Why ask them all these condition questions just to disqualify the lead later on over financials that just won't work, or an asking price that's way too high? Get the important stuff first, and then decide the destiny of an opportunity in your pipeline very, very early on. Very early on. What do we ask with a buyer? There's literally a button on my link in bio that goes 100K to invest, click here. I don't want to talk to people that got 20, 30K. They can't buy from us because we're selling everything cash under 200 anyways, and our lender will not pre-qualify anyone that doesn't have 100K cash or more, or liquidity or more, right? And we don't want to work with people that can only do one and done deals with us. We want relationships with investors. So go through our acquisitions process, right? Just like click the first two buttons. Go to my link in bio, just for learning purposes, right? Go to my link in bio, click that 100K to invest button. You'll see that button. That's already a vetting button. We're already vetting a lead. And then you go one step further and look at the application. We're asking how much cash they're willing to allocate over time and if they're willing to buy cash, right? And what do you think happens on the other end? We have a system that funnels them, right? Approves or denies them or declines them based on the highest value clients, because we can't work with low value clients. It doesn't work for our business model, right? We have to tell them to come back later when they're ready or go find an alternative. So take a look at that, get a feel, but being able to vet early on and vet for realistic expectations, things that really have a likelihood of closing, is extremely important to you, because what's going to happen is you're going to get to spend more time with good deals. Because it takes a lot of time to follow up with the good stuff to actually get it to the finish line too. You're going to spend way more time with good deals and not waste time with bad ones. So what are we talking about here? We got 5 key, slightly more, less often discussed sales strategies that I think are more important than the frequently discussed sales strategies. Number 1 is understanding, not empathy, but a deep understanding of the other party, your party, right, or the party you represent, and the business, the whole business, a deep understanding. We've got alternatives, right? Locking down, being able to say, hey, does the other party have better alternatives than me? And if not, let me lock down those alternatives so that I'm the only viable option left. And then do I have a lot of alternatives so that I don't have to accept a subpar set of circumstances here in this transaction? Number 3 is detachment. You can't give a shit. Ice in your veins, right? You got to be cold as hell and not fear losing a deal. Sometimes my acquisitions reps, they hate me because they'll bring a deal that's not that great, and the second I'm just like, no, seller profile's off. I don't like their attitude. They're going to be a problem later on. Burn it. Too quick. But guess what? I make a lot of money on good deals, and I don't spend time on bad ones very often, right? And the business is efficient. So detachment from the outcome allows you to focus on the good stuff. Qualification, that's how you focus on the good stuff, is getting the bad stuff out quick. And then volume, a lot of opportunities. If you stack your pipeline with a lot of good opportunities, you filter out the junk, you emotionally disconnect from all the shit ones that aren't really best for you, let them go. And then you just focus on the good ones, and you understand your business and understand the seller's alternatives and why you can provide value to them, then you're going to win at real estate investing. And guys, it only takes, you've heard about some of these home run deals that I've done. We've talked about them in these previous lives, right? Recent one, Fourplex we got a week ago, $215,000. Market value is a little over 400. Probably 400 as is, 385, 395 as is, what we could probably wholesale this thing for. That's because we have a good sales process, right? That's not luck. We get lucky deals every week. This $40,000 Fourplex, it's not luck, right? Investing in this process could get you a lot of money really, really quick, right? But really quick means really quick after you've developed a good sales process, right? Versus the folks that are out there just hunting on the MLS and getting what they can, or just not being able to do good deals because they're blacklisted. Let's say you don't want to get just crazy home runs. Let's say you just want good deals that are passive. Like clients that come to me, they don't want to go hunt for off-market deals at half market value. They already make money their own way. They don't need to make all that extra money by creating a new job or new business for themselves, right? But they come to us and they go, we want good, reasonably priced deals, fully teed up for us, and we want a relationship. Well, guess what? They have to win too, versus other customers, by understanding me, by understanding themselves, my business's needs, how I can provide value to them, whether it makes sense. So even if you're not going for the crazy home run off market deal, you need good relationships with people in the biz to be able to have a quality portfolio, right? And these tactics they'll take you there, right? Even if you're not trying to create something crazy. That's it for y'all today. One last note. When you're selling, you shouldn't be trying too hard. You should never feel like you're trying too hard. You should never be coming across as trying too hard. You should be yourself and relaxed and just knowledgeable, right? And useful to the other party. You should never feel like you're pushing something, ever. You should never be convincing someone to do something they don't want to do, ever. Big waste of your time, right? And you should be ethical. You should be able to ethically win. That's all. Turn off comments during live, huh? That's what you guys think. Yeah, someone said coffee's for closers. I don't know. I mean, I'm a 2-cupper a day. I don't drink a ton of coffee, but I'll lock your ass up. We don't use scripts. So, I mean, we use process, right? And process acts as an outline for a conversation. Scripts sound scripty. You ever gotten a cold call from someone who sounded scripty? Look, I mean, I often solicit, right? Or our business solicits. Reasonably so, right? Ethically so, but we solicit. I get crappy cold calls and I'm like, you fucking suck. Just hang up on them. Or cold emails. Like, you should see these cold emails I get. I'm like, why would I ever talk to you? Right? And they don't care. They're probably just seeing me as one prospect in the pipeline. Marty wants to get my course just because he likes my content. I appreciate it. Look, I get so many messages from you guys that go, hey, you know what? I'm going to get your course just because you guys have given us so much free value. And just, I love your game. But I'm going to tell you right now, don't do that. I'm not here because I need you to buy my course, right? I'm doing just fine. I like teaching you guys. I like talking to you guys. I appreciate the love and the support. The course is a value bomb. There's nothing else out there for $500 that's going to teach you something as completely as that does. You are going to leave that with a clear process. If you want to invest out of state, or you want to have just better procedure for investing out of state, or use our procedure, which by the way is like battle tested on like hundreds of deals a year, or hundreds of units a year. Sorry, we do a little over 100 deals a year as of last year. Like I think we did like 130 total, including the stuff that we bought. Average is like 3-4 units each, something like that, maybe 2.5-3 units each. It's a battle-tested process that developed over the course of a lot of reps. It's not a process like, look, I mean, I've talked to these other guys that go, yeah, I've done this a couple times, so I already know so much more than like most beginners do, so I'm going to make a course. That's not what this is. This is from the trenches, refined, thought through stuff for $495 because I don't have the fucking heart to charge you guys $2,000. If it's useful to you, buy it. If it's not useful to you, don't feel bad. Show up for the free content. I love that you're here. You already have a little sneak preview of it. You have a full curriculum of that course in the bio. So what's been my shift in buying strategy given the high prices in today's market? Well, you know what? We've always marketed directly to seller. We've always bought at a discount from market value. And I'd say we're not changing our product. We like this affordable housing, C+, B- in markets with rent growth, a lot of management options, and some downside protection, right? So like non-volatile markets. And we're sticking with that product right now because I think it's a good product to buy in a higher market because it cash flows well, right? How our strategy has shifted has been really with our debt and liquidity strategies, right? Because you need two things to be able to buy investment property. I made a story about this earlier this week, so you guys might have caught on. So the two things you need to buy investment property, what are they? They're money of your own and money of somebody else's. Right? And you might need them in different balance than I do, but I have cash of my own and I have cash of the bank's borrowing power, right? So there's a limited amount of both. You can't just borrow infinitely at any stage in your investing career, no matter how good the deal is. A bank will tell you to slow the fuck down at some point, right? And obviously you'll run out of some cash at some point. And maybe you have a limited amount of investors that you can co-borrow with because you can't be on too much stuff. My strategy has shifted so that I have more in reserve. I'm storing more borrowing power and more cash buying power than I would in a lower market. That doesn't mean I'm not buying, right? I'm just leaving a lot of meat on the bone, or a lot of room, a lot of gas in the tank, so that if it does get cheaper, I can go much deeper at that point in a lower market. But I'm still buying a lot. I just picked up 30 units, this month, right? A lot of them all cash too. So I'm buying for sure, and I'm selling to fund the purchases. And I don't think the business changes much. I think the way the business spends money changes a little bit. That's all. Doing my best for you guys, man. I appreciate all the love that you guys send here. A bunch of people pump my ego up on here and talk about how much I'm helping. I'm here to give you all that unique stuff that you're not going to get on these other pages. How are you dealing with materials and labor bottlenecks? Honestly, I'm not dealing with them much. My property managers are full service, and I try to buy properties that are already relatively stable. So I'm not building, I'm not doing full gut rehabs. Most of the work I do is cosmetic. I don't have a lot of issues. And if I buy a property that needs a lot of work, I make sure to buy it at such a substantial discount from market value that I'm willing to wait 3 months to get that work done. I don't care. But I usually buy occupied. We got some Sacktown people, huh? I'm always gonna post these lives for you guys, unless like Instagram glitches out on me, which it rarely does, but I think now it has a lives archive feature where you can go in and download the live, but it's just kind of lower res and shitty. But yeah, this is gonna be posted for sure. Where do I get my mailing list? You guys want some juicy info? Okay, really general. Sometimes I get it from ListSource. Look, it's not about where you get it. I'll say this for a second. Sometimes I get it from ListSource. Sometimes I have a software engineer that I work with that will build a script and rip it off of county websites. That's usually the two places. Now we have access to CoStar, so we can get lists off CoStar. All those are great options, but it doesn't really fucking matter where you get your list, as long as the list has enough data. What matters is how you interpret your data, how you manage the list, clean it up, filter it, right? A lot of people think they know how to filter it. I'll tell you right now, they don't. And if I didn't want to, or if I was willing to create a bunch of unreasonable competition, I would create a class for you guys and charge a pretty penny just to show you how to clean up data, and it'll be the best money you'd ever spent. Best money you'd ever spent. I had a buddy that might be watching this live that took a $20,000 multifamily syndication weekend seminar with some popular guy who has a podcast. So he did this big expensive seminar. Then he was gonna go market to sellers. He came in here, he sat with me for like 3 hours, and I showed him how to manage lists, right? And how to filter data and how to prep your list properly for marketing. And he's like, dude, that's more than I learned in that $20,000 seminar. That's more valuable. But I'm not gonna make it. I'm not gonna make it. I charge way too much money for it. Someone asked me yesterday, they said, hey, when are you gonna make like a master class on wholesaling? And I'm like, we do that really, really well. Really, really, really well. I would say if there's something we're top of industry in, number one, it would be creating a very effective and efficient wholesaling business without cheating people online and bullshitting people and all that. So if I were to create a wholesaling masterclass, I'd have to charge like fucking 20 grand for it, right? And it wouldn't be in person, and it wouldn't be live, and it wouldn't be one-on-one consulting. It would be video, and I'd charge 20 grand for it. And I'm not gonna do it because I don't wanna charge $20,000 for an online course. Maybe if I retire from the biz and I kind of hang it up, which I got some time in me, folks. I'm only 32. I got some good years in me. So yeah, probably not making it. Probably not making it. So what you guys thinking? Give me some more questions. We're getting good questions today, by the way. So in previous lives, we've gotten a lot of like, I don't know, what's the best city to invest in? How do I get a loan? Whatever it is, right? And quite honestly, they get old. They make the lives feel repetitive. But when the discussion's stimulating, you make me kind of think through the answers, and I'm giving you kind of more profound info. I love that, right? So give me an opportunity to share things with you that most people aren't willing to share by asking questions that lead me into them. I don't just have like a list in my back pocket of secrets that I want to tell you, right? But when you ask good questions, I'll give you good answers. What demographic do I go after if the qualifications are simply anyone with liquidity and credit? I don't target a demographic at all. I don't, because what I've got here, now look, people should target a demographic if they're advertising conventionally. This is a demographic for investors, right? So someone asked, who am I targeting for investors? I don't target any particular person for investors. I allow my content and its natural reach. I have a lot of organic reach on this platform. Unfortunately, it's a very big platform, right? 272,000 followers. They're engaged. I engage with about 100,000 people a month, according to the stats on Instagram. And then I advertise just to kind of like move digital products and to be able to build familiarity with my audience, right? But the audience comes to me and they self-qualify by engaging with my content, right? And then the people who find value in my content, who want to click that button, they're already qualified a lot of the times. They already fit the profile. I'll tell you what the profile happens to be, but I don't target them in any way. The profile happens to be people that are between the ages of, I'd say 26 and, 27, 28, like late 20s to 45. Don't see too many people over 45 that have good paying jobs either in tech, finance, or sales, that have a substantial amount of either equity in stock or equity in property, and they're looking to reallocate it. That's it. They're relatively new to out-of-state investing. They might have done it a couple times. They might have done it a lot of times in some cases, but usually they've got some investments, a good amount of money, a net worth of probably around $500,000, excluding primary residences. I'd say that's the general case for our investors. And they're not old. They're pretty young and they're successful and they're smart and they have a lot of runway ahead of them, right? These are not people that are like looking to retire pretty soon. They're people that are looking to create a lot of wealth and they want to accumulate, and this is the start of their accumulation process. They're people kind of like myself, honestly. Like they're same story. I think we relate to each other, and you can see who the audience is on these lives, right? But yeah, I'd say they're successful young professionals. What else we got? I got time for like one more question. So I have an interview at 10:30. I love interviewing sales guys because some of them come in like kind of choppy and like with like a little bit of extra swagger, and I'm like, all right, dude, I'm gonna fucking break that ass down if you come in with that kind of swag. Because like people who think they're good salespeople have an ego, right? But the funny thing is that you got to be really good. Like you got to be really good if you're going to come in and have like an ego with like the owner of a sales business, right? 'Cause I think a lot of people interview with like a manager somewhere, and I'd say like managers are very skilled within like the scope of their corporations, but to be able to build something and like be like the head of the snake with that much revenue attached to it, you're not a 100K a month salesperson when you got a business like this. You're much more, right? So it's kind of funny when they come in and they try to flex a little bit, because it doesn't work. I don't get flexed on. It's never happened in my life, or I don't allow it. I just don't put myself in that kind of situation. So hit me with one more good one. Your twins are draining your bank account. All right, man, you better put them to work like the old days. Put $35K into a property you own. Reappraise it now or when you cash out refi in 5 years. So look, Eric, this is kind of a part of that conversation of liquidity strategy and debt strategy, right? So I'm really, really under leveraged in my portfolio. Why? Because I don't need the money right now. And if I needed the money, like for a really good opportunity, I'd pull some more out. So see your property as a bank account, right? It's not as liquid as a bank account, but it is a bank account to some extent. Your equity is worth something. And if you don't need that extra money from that equity as in the form of your cash out refi right now, then don't get it right now. But if you do need it, or you have great opportunities that are worth reallocating some of that equity towards, and you can support the debt reasonably and it fits your long-term debt strategy, then I'd say go for it now. Right? But I wouldn't hurry. I never hurry to do stuff like cash out refis, unless my portfolio like dips to a really, really low LTV. Like I recently did a 500K cash out refi. I'm in the process of closing one up pretty soon. We just got some appraisals and that's it. On some properties that we bought for really cheap that we own free and clear, and that'll take us from like 21% LTV to like, I don't know, 25, something like that, right? And that money is not absolutely necessary now, but we plan to aggressively purchase in the near future and have had a lot of opportunities come to us, so we kind of want to have that dry powder ready and not dip below a certain amount in our business bank account. So you got to think about your long-term debt and investment strategy and go, when should I take this money? When should I have it ready? That's the last one, y'all. That was a really good question too. I appreciate you showing up today. A little bit of closer talk. It's kind of fun talking about things that are not just pure real estate, because I'd say honestly, 20-30% of this business is my knowledge of real estate. The rest is all businessy stuff. So write that down. That's an important line too. Really appreciate you guys. Have a great weekend. I'm gonna post this live. We're gonna do a giveaway soon. Then we're gonna get the hell out of here. I'm gonna prep for this interview. See y'all later.